By the way, thanks to you and Integrity and to all the speakers and them sharing their wisdom. It was great.
Oh yeah, this has been one heck of a conference. So Michael, the floor is all yours. Take us home and look forward to seeing what you're going to talk about.
Okay, let's go right over here. I got to share my screen here.
Okay.
I am going to share.
And I'll be assisting you with your polling questions. So just tell me when to launch.
Yeah. Okay, great. Can you see my screen or not yet?
Yep. Yes. Yep. You look good. Everything's ready to go.
Great. All right. Okay, here we go, everybody. I try to pack a lot of stuff into the next 30 minutes. So without further ado, let's go through what I'm going to cover. So you want to know who the heck is this guy and why should you listen to him, right? And we're going to talk about the latest trends in IRS enforcement, the current landscape of the tax resolution industry, 4 choices that all taxpayers have when it comes to delinquent taxes, the 5 most common collection alternatives or settlement options, and a sample case study. So why should you listen to me? Well, number one, I've been helping tax professionals add tax resolution services for over the last 7 years. And prior to that, I started my own tax resolution business on my dining room table without any experience, no IRS experience, no book of business, very little tax experience, which consisted of doing some manual 1040s for family and friends. And what I quickly discovered that being excellent at being a technician, at being excellent at delivering my service, that wasn't enough. I realized what was more important to me was learning how to get clients than it was at being a great technician. So I needed to figure out how to get clients. And I went outside the tax and accounting industry and hired business coaches. I studied under mentors. I was in Dan Kennedy's Platinum Mastermind for a few years. So I was a student of direct response marketing. And I learned very quickly how to crack the code. And I became an overnight success because after 14 years and about 15,000 clients later, I put $22.6 million in my bank account solely from representing clients before the IRS. I did not have a traditional tax or accounting practice. I didn't do write-up. I didn't do bookkeeping. I didn't do planning. All I did was resolve individuals and small business tax problems. Okay, so let's look at what's happening right now with the IRS. So as of June 15th, the IRS finally took off the gloves and started issuing millions of final notices. Those are the final notices of intent to levy. They're following up that action by August 1st with the seizure of people's bank accounts and also garnishing their wages. So the IRS is back. The IRS is also, through revenue officers, pursuing nearly 1 million high-income non-filers because the IRS has identified that those folks owe about $46 billion. The IRS also has a brand new division, their cryptocurrency division, and they're going after traders with John Doe summonses. And they actually just sent out their second round of letters asking traders to file delinquent or amended returns and warns that if they don't accurately report those cryptocurrency transactions, that they can face civil and even criminal enforcement. The IRS also reinstated their passport certifications. During COVID, they stopped revoking and non-renewing passports. They are now doing that again. If you owe the IRS 52 or 53, that's actually $53,000, they can revoke or not renew your passport if you haven't worked out an installment agreement or an offer in compromise. They're back now reinstating those passport certifications. They've also, this came out last week, that right now taxpayers, consumers can actually appoint their own representative online through the IRS's website. So now they're giving consumers digital control over who can represent them. These are some of the initiatives that the IRS is undertaking to make their agency more user-friendly and more into the 21st century. IRS is big time pursuing worker classification audits. That's where businesses classify their workers as 1099 independent contractors to avoid the Social Security and Medicare withholding and also federal withheld tax. That's a big issue. They're also going after abusive trust arrangements. where taxpayers set these up basically just to conceal ownership of assets and income. They also have a big division going after micro-captive insurance companies because technically these are tax shelters. They're not really selling insurance. They're selling tax shelters to high income filers. They also are going after land conservation transactions, also known as syndicated easements. So there's a lot of enforcement activity going on right now at the IRS. And we have a commissioner, Chuck Reddick, who's one of us. He's a tax resolution guy. He's a compliance and resolution guy. He owned a firm in Beverly Hills, a tax controversy firm. This is the first time in 20 years that the IRS has not appointed a Washington insider or a bureaucrat to head the IRS agency. And that's great news for practitioners because he's one of us. Now, what is tax resolution? So resolution it's also known as IRS representation. It's also known as tax controversy, and their service is designed to help troubled taxpayers resolve back tax problems. And usually these clients seek our help after they've ignored the problem so long that the IRS estate has lost all patience and now has decided to forcibly go after unpaid taxes. Think of tax resolution as financial planning in reverse. Look, anyone can fill out a Form 433A, which is a collection information statement. That basically forms the basis of any IRS collection case. That's the meat and potatoes of any IRS collection case. What your clients are paying you for is how to strategize or position them in the best possible light, also known as how to get them as destitute as possible on paper so that they get the best settlement option with the IRS. And as I've mentioned, after 16 months of the IRS finally flipping the switch and taking the gloves off, there are 50 million people right now who have been identified as owing back taxes or non-filers. And as a CPA, an enrolled agent, or an attorney, you are in a terrific position to bring clients in, get higher fees, much higher fees than you can on any 1040 return. Better yet, you win a client for life and they become an ambassador for you, referring other clients to you. As I'm going to explain on the next slide, there's never been a better time than right now to add this to your practice. And here's why. Number one, in January 2020, pre-COVID, the IRS already announced plans to ramp up enforcement. And then on March 16th, 2020, not only did the country shut down, but the IRS shut down as well, throwing millions into financial distress. Many taxpayers didn't file their 2020 returns because they didn't have the money to pay what was owed. Those that did file, that received unemployment, are now discovering that they owe because they didn't withhold. Tens of thousands of businesses on Main Street have closed for good. I don't have to tell you that. You see it in your own communities. Most of those businesses owe payroll taxes. They also, if they owe payroll taxes, they also have an associated trust fund recovery penalty case that's associated with that payroll tax case. In 2021, about 6 weeks ago, the IRS announces they're going to double their workforce and add 87,000 new revenue agents, new revenue officers, new customer service reps over the next 6 years. This is unheard of. This is unprecedented. Right now, there are 70,000 employees at the IRS. They lost 23,000 over the last 9 years. But of the 70, 50,000 have been identified as being eligible for early retirement over the next 5 years. So the IRS is taking that into consideration and hiring 87,000 new folks over the next 6 years. The Biden administration has pledged $80 billion towards enforcement to the IRS over the next 10 years. Someone finally figured out that the return on investment is about a 9-to-1 return. For every dollar they spend in enforcement, they get $9 back through enforced collection. Now in June, just last month, the Senate struck a $1 trillion infrastructure deal. In that deal, there was $40 billion earmarked for the IRS. And then last week, that deal fell apart. They took the $40 billion off the table. But the Democrats put the $80 billion back in their new social programming $3.5 trillion plan that's on the table that will probably pass in some form or fashion. So, and this is all to fund the $3 trillion that they gave out through the American Families Plan and the American Jobs Plan. People, they have to collect the money somewhere. They are going to collect the money from your clients. That's just how it works. So the last time the stars were aligned like this was 11 years ago in 2009 due to the Great Recession. Right now, 30 to 50 million taxpayers owe the IRS $1 trillion. It used to be 458 billion about 6 years ago. It is now up to $1 trillion. Those are people who should file that don't, and people that do file and cheat. $1 trillion. There's a ready-made market. Of those 30 to 50, 8.2 million have already been identified and are getting threatening collection letters every day of the week from the IRS. They're already in the collection division, and that's not counting the coming tsunami due to COVID-19. 7.5 million people every year don't file their tax returns. That's every year, 7.5 million people have delinquent tax returns. If you wanted to add just 60 grand in additional revenue to your tax practice, that's one resolution client a month, just one. If you wanted to do $250,000 in extra revenue, that's one resolution client a week, or about 48 clients a year to get to the $250,000 mark. There's never been a better time than now to add tax resolution to your practice. And you need to do this because I'm going to show you in a second that each new client is worth about $5,000 to $8,500 to you and much more. This practice lends itself quite nicely to value pricing. When I had my practice in 16 years, I never sent out one invoice. I never traded hours for dollars. I never did hourly billing. I actually had deferred revenue on the books versus going after accounts receivable. I had money in the bank, lots of it, for services yet to be performed. And I know a lot of you this doesn't apply to, but would you like to stop dealing with ungrateful, unappreciative tax prep clients who are only with you because of price, blowing up your phone day and night, asking where their stimulus check is, asking where their refund check is? We just went through the tax season from hell. We thought the 2019 tax season was bad. 2020 made that look like a lamb. So that's one of the other reasons why you need to add tax resolution to your practice. Look at all the artificial intelligence today, all the do-it-yourself free online services. I mean, if you're just doing tax prep and accounting and write-up and bookkeeping, you're going to be extinct if you haven't made a change yet. If you wanted to gross $100,000 in your tax prep business with other tax prep clients, you would need 366 new clients. $273 is the average fee that an American taxpayer pays in this country to a tax professional. Now, a lot of you on this call hopefully charge a lot more than that, but I speak to hundreds of members over any given month, and I know most of them, a lot of them charge even less than that. Now, if you wanted to gross the same $100,000, you would just need 2 tax resolution clients a month or 24 clients a month. So what do you want? 24 clients or 366 headaches, 366 interviews, 366 copies of their tax returns or loading it up to your portal? So let's go to our first polling question, which is, Chris, do you want me to, there you go. So what is the average fee for a tax resolution client? Is it $2,500, $10,500, $995, or $5,000? Great. Well, excellent. I see most everyone is right. Most everyone is picking the $5,000, $5,000 to $8,500 choice, which is choice D. Excellent.
Okay, polls are closed, sharing results.
Okay. Should I hit the stop share results?
Yep, go on.
Okay. Okay, so let's look at the 4 choices most delinquent taxpayers have when it comes to owing the IRS. But before I do, I want to go over a couple of the most frequently asked questions I get. I'm going to dispel some myths because a lot of people think that tax resolution clients only come from like the 5 metro areas of the United States, like Chicago, Illinois, Los Angeles, Miami, the tri-state area, New York, Connecticut, New Jersey. Nothing can be further from the truth because tax problems affect everybody from truck drivers to physicians, from Maine to Hawaii. There's $1 trillion owed. And most people, most businesses that are in trouble with the IRS need assistance. And those include retailers, especially restaurants today, manufacturers, wholesalers, e-commerce companies, cannabis dispensary and distributors need a lot of help, cryptocurrency traders, as I mentioned, and even professional practices. I represented many CPAs, attorneys, financial planners. They come from all walks of life. Another myth I'm going to dispel is as a CPA, an EA, an attorney in good standing with your licensing agency, there's no geographical boundaries. You can represent clients in all 50 states. If you're a CPA in Indiana, you can have clients in Florida. You can have clients in New Mexico. It doesn't matter. That's why this business also lends itself very, very nicely to conducting it 100% remote or virtual. In the last 8 years of my practice, 99.9% of my business was conducted over the phone and Skype. I never saw clients in my office, especially people with notices of federal tax liens. They don't expect to come into the office. They are very happy dealing with you remotely. So let's go over the 4 choices that most taxpayers have. The first one is pay the requested amount in full. So how many people do you know can take out their checkbook, write a check to the IRS lump sum, and pay the IRS? Not many. In addition, you know and I know that 70% of those notices are incorrect to begin with. So that's not really an option. The second option most people have is they ignore the IRS until it's too late. You know, they ignore the IRS until the IRS decides they've had enough of this. Look, every balance due period, the IRS issues 5 collection notices. Each one is more aggressive than the prior one. Okay, if you ignore the last one, which comes certified mail, and you don't file an appeal within the 30-day time period, the IRS is going to seize all your income sources and also your bank assets. So they're going to inflict major harm and pain on the taxpayer if the taxpayer ignores them until it's too late. The third one is taxpayer sets up a never-ending monthly payment plan where the IRS keeps piling on interest and penalties and interest on top of the penalties, so much so that even though the taxpayer may be making monthly payments, they're not making a dent in the payment because the penalties and interest eat up whatever that monthly payment is. And then the fourth option they have is to reduce the total amount owed with the help of a tax resolution specialist. Which one of these choices do you think most taxpayers would make? And that would bring us to the second polling question, Chris, is which choice would most taxpayers make to resolve their IRS-backed tax debt? A, pay the requested amount in full. B, ignore the IRS until it's too late. C, enter into a never-ending payment plan. Or D, reduce the total amount they owed. And everyone is
5 more
paying.
seconds. All right, closing poll, sharing results.
Right. Yeah, everyone is definitely paying attention because most taxpayers want to reduce the total amount they owe. They just don't know how to do it or who to turn to. Okay, we're going to continue. Okay, let's look at the 5 most common IRS settlement options that are available. So most of them follow a 3-step workflow process, which I'm going to show on the next slide. And a lot of practitioners are afraid to get into the tax resolution business because they think they have to know everything about everything. I call it the paralysis of analysis. Okay, so just think about this for a second with regard to messing up or making a mistake. If somebody comes to you owing $75,000, has 4 years of unfiled returns, is being levied by their employer, what can you do to make that situation worse? Essentially nothing. As a matter of fact, you provide immediate relief just by registering and filing your power of attorney, Form 2848, with the IRS. You provide immediate relief because now, mandated by law, you have stepped into the taxpayer's shoes. The IRS under law has to contact you, not the taxpayer. Speaking to the IRS is the second biggest fear in the United States, only next to public speaking. Nobody wants to speak to the IRS, especially someone who owes. So here's the three-step workflow that every collection case entails. The first phase, I call it the discovery or transcript analysis. This is where you find out what's owed, how many years in question, the penalties, the interest, if they have liens filed against them, if they have any prior appeals, any bankruptcies, and as importantly, what the collection statute expiration date is. Each balance due period carries with it a 10-year collection statute expiration date, meaning the IRS is barred by operation of law from collecting on a debt 10 years after it's been assessed, as long as there's been no events that told the 10-year clock. The second phase is compliance. This is where you get the taxpayer caught up on all their delinquent filings and making sure that they're withholding correctly going forward or making their 1040 estimated tax payments on a go-forward basis. And the third phase is what I call permanent resolution. This is where you negotiate the installment agreement. This is where you negotiate the offer in compromise. This is where you deal with the appeal officer, et cetera, et cetera. So let's look at the five major collection alternatives. Let's take offer in compromise. So an offer in compromise is a formal legal binding agreement between the taxpayer and the IRS that settles the taxpayer's debt for less than the full amount owed, many times for a fraction of what's owed. This is codified into law per Internal Revenue Section 7122. It's the only collection option that is actually law, meaning after you receive the acceptance letter from the IRS, if your taxpayer hit the lottery for 10 million bucks the day after the date of the acceptance letter, the IRS cannot touch that money, as opposed to they can in an installment agreement. So this is a very good settlement. The truth of the matter is only 30%, 25 to 30% of your tax resolution clients are going to qualify or be eligible for an offer in compromise, because the IRS, it's a very intrusive, very invasive financial process where they really peel back the onion on assets, liabilities, income, and expenses. The second major alternative is the installment agreement. It's like a commercial payment plan, if you will. It's an agreement between the taxpayer and the IRS that fully pays back the liability over time, generally 60 to 72 months. And there's some tentacles off of the installment agreement. You have what's called a direct debit installment agreement. You have a streamlined installment agreement under $50,000, and they have a new streamlined agreement up to $250,000, where no financials need to be provided as long as the client can full pay that liability within the collection statute expiration date. This is found in IRM Internal Revenue Manual, Section 5.8, Financial Analysis. Now, I tease this one out separately because I call this one the new offer in compromise, or a backdoor offer in compromise. It's an agreement. The partial pay installment agreement is an agreement between the taxpayer and the IRS that partially pays back the liability owed. It's determined by what the taxpayer can afford over the remaining life of the 10-year collection statute. This is a really good option to use when your taxpayer has net equity in assets, because in a partial pay installment agreement, the IRS usually doesn't look toward the net equity in assets to compute what the monthly payment amount should be. So a lot of times this is a much better settlement for your client than an offer in compromise. It's a wonderful, wonderful tool to use. It's the partial pay installment agreement. Next one is penalty abatement. So the IRS has 148 ways they can hit your client over the head with their penalty club. There's 148 different penalties they can assess. And the penalty abatement is where the IRS agrees to remove or reduce the penalties assessed against the taxpayer, either what they call first-time penalty abatement, which you can request verbally over the phone, or reasonable cause criteria, which can be found in the Internal Revenue Manual, Section 20. The IRS calls it their penalty abatement handbook. There are 9 reasonable cause arguments that you can make that you can use to abate penalties. And the 5th and last collection alternative is the currently not collectible status. So a CNC status is where the taxpayer must demonstrate, per the 433A, a financial hardship. And if he can, he's not required to make any monthly payments toward the debt. Now, the bad news is penalty and interest continue to accrue, but the good news is the 10-year clock keeps ticking. So I use these in limited situations because this is a temporary solution. As a matter of fact, when you get the currently not collectible status agreement letter from the IRS, the first sentence says this is a temporary situation. I use this for elderly people on fixed incomes as a permanent solution, elderly people on fixed incomes because they didn't care about the lien or they didn't care about their FICO score. And I used it as a Band-Aid or a stepping stone to an offer in compromise or a partial pay installment agreement. So that's when you use currently not collectible. Now, let's look at a sample case study. This is the rule, not the exception. So taxpayers owe $70,000 for 2014, 15, and 16. They have 4 years of unfiled returns, 17 through 20, which you've determined are going to be a push. They're not going to owe anything for those 4 years, but they need to be filed. The husband is being levied by his employer, and you've taken them through a financial consultation. You've determined that they are good offering compromise candidates because you've determined that they have about $250 a month in disposable income and $3,000 of net equity in a vehicle. So here's how you calculate the offer amount. You take the $250 of monthly disposable income, you multiply that by 12 because that's the multiplier the IRS uses in a cash or lump sum offer. So that equals $3,000. You take the $3,000 of net equity in that vehicle, you add it to the monthly, the reasonable collection potential, and you have $6,000 as the offer amount. Now they owe $70,000 and you're going to offer $6,000. And if you have all the supporting documents and everything buttoned up, the IRS is going to accept your $6,000 offer. So what does the client get? So the client gets a $64,000 discount on the 70 grand he owed. He gets their life back because people that have IRS problems affect all aspects of one's life. It affects their relationships with their spouse, their children, etc. They refer others to you because you walk on water. You have a client for life. The lifetime value of a tax resolution client is worth a lot more than the actual fee, because if you offer other services like brokerage services, insurance services, planning, you have all of those other services that the client can eventually be upsold to. So the lifetime value is huge. You, as the tax resolution practitioner, you get $8,850 in fees, and I'm going to show you that on the next slide. If you're inexperienced, this case is going to be in your inventory, in your office for 12 to 14 to 15 months because of the IRS's workload. You can't control their workload. However, you probably will be in the case 20 man hours in total. So your effective hourly rate for that case is about $455 an hour. With some case management software or some experience under your belt, you can easily shave 5 hours off of that 20, giving you 15 hours net on this case. And now your effective hourly rate is $600 for this work. It creates wealth. You're able to predict future cash flows and profitability. And here's how you break down the fees. I have a full fee schedule and guideline, but here's how you construct or build the fee. The IRS transcript investigation for the first phase is $1,500. I never charge less than $400 for a simple W-2 return for a delinquent tax return. So 4 times 4 years is $1,600. You charge $1,000 to get the levy released. And then for an offer in compromise at that level is $4,750, which includes all the preparation, the submission, the negotiation of the offer in compromise, the 433A, and to negotiate the offer. So all in, you're at $8,850 for this case. This is the rule, not the exception. These are your bread and butter tax resolution cases. Now, as I mentioned, these are unprecedented times, meaning there's an unprecedented opportunity giving you unprecedented access where you don't have to get on a plane, have your flight canceled, or book a hotel room. And from the comfort of your home or office, you can join us for a 360-degree, totally interactive experience at our 6th annual Tax Resolution Success Summit. If you're interested in dipping your toe in the water or expanding what you're already doing, this is the only event in the country that's dedicated 100% to direct response marketing and business mastery in this niche. You'll have a fun, vibrant, educational, interactive networking experience. This is not no Zoom call, everybody. This is an interactive experience where I'm going to see you on a big screen in front of me. I'm going to bring you on to the virtual stage. We're going to do breakouts. You're going to get your questions answered by me and all of my experts. On the first day, which is August 26th, this is a 3-day event. You're going to leave the first day with your own customized marketing plan for tax resolution. We're going to reverse engineer all the numbers in your business, and I'm going to show you how to conduct this 100% remote without adding any back office staff at all. On the second day, we're going to talk about finding all the hidden money in your firm that you didn't know exists. I'm going to teach you my value pricing matrix. We're going to go through how to answer the phones, how to take someone through a consultation, how to close the deal on one phone call or in one meeting. And if you want to register, there's the registration link right there, rozstrategies.com/summit 2021, or you can call John at our office. On the third day, I'm going to show you how to onboard a brand new tax resolution client and go through all the workflows of a typical collection case, from getting transcripts and a collection hold to final resolution. We're going to go through all the major phases and activities of a typical collection case. And I'm going to give you your implementation plan for the next 30 to 60 and 90 days. So when you leave the event, come Monday, you'll have a clear roadmap on what to do first, second, and third. Some of our speakers include Parm, who used to work for me. I trained him myself at my tax resolution firm. When I exited that business, Parm left shortly thereafter. He runs a 7-figure firm here in Los Angeles, solely representing clients before the IRS. He's going to be our technical trainer. We have Dr. Patty Ann Tublin, who's going to talk about relationships and money, right? I mean, how many of you have a hard time getting your partner on board on a new initiative or your spouse on board on a new initiative? She's going to, and by the way, you should bring them to the event so you can hear her speak so that you and your partner or your key employee can all get on the same page. We're going to have Dave D, who's a master of one-to-one consultative selling. And I'm going to have my good friend, Hugo Fernandez, who does all of our digital marketing and a lot of our members' digital marketing, speak at the presentation, speak at the conference as well. You'll also be able to visit our sponsors, Pitbull Tax, which is the premier case management software in the industry, Textalent, Tax Mama, even Rosenberg, and some others. The regular price for this event is $697. If you went to my website, that's what you'd see it for. But for everyone on this call, I have a special webinar pricing today. It's just $298.50, so it's 57% off. If you want to attend, grab your ticket now. By the way, you're going to get an amazing event box. It has my 225-page playbook to follow along with me throughout the 3 days. And my wonderful and smart and pretty wife and business partner, Rosalind, has some great swag and surprises in this box. These are going to be shipped to everyone about a week before the event. So you'll have something to follow along with at the event as well. There it is, everybody. You can get everything I just spoke about, the 3-day event for $298.50. I know I went really, really fast. I took a lot of stuff out of this presentation, Chris, because I wanted to do it within the 30-minute time frame. I know I'm over. I apologize. I'm sorry.
Hey, I gotta say, I mean, if anyone knows taxes, it's you, my friend. This is great. Guys, if you're looking to add this to your firm, like, by all means, with an awesome discount. Thanks for doing this for our audience today, Michael.
Sure.
And again, thanks for taking time out and joining us. Everybody, this is it. And so just to remind, you're going to get an evaluation form within 24 hours after the completion of this webinar. You submitted all your responses to the polling questions. You'll get your credit certificate, 7 credits today. If you have any issues or any other inquiries, just reach out to MyCPE. The email address is support@my-cpe.com. What a day, right? Hopefully you guys learned a lot of information. Thank you for taking time out of your schedule. So everybody, enjoy your evening, enjoy your afternoon on the West Coast. And again, thanks for everyone's time. Take care.
Thank you.